United States Catan Championship. Oh, so close, and yet I was so far. We'll do a quick recap on my entry into the big tournament, and then we're going to talk about buying into biotech stocks, and then we're going to talk about Home Depot, a company everybody loves. But as we get started, this is a financial education presentation. You must do your own due diligence on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone.
Hey, Mike, was this your first round at the national championship?
So this is, so just give people background. There's a game called Catan. It's a lot of fun. This year, I decided to play in a couple tournaments that were qualifiers, and I qualified for the United States Nationals. So I went this over the weekend, and I thought this is my chance to do something. And anyways, so in the tournament, I ended up finishing 20th out of 147. But anyways, it was a lot of fun.
Mike, I'm an optimist, I'm thinking 20th might be like the best first performance anyone's ever had.
I have no idea.
That's what I'm going with.
And I was telling Corey that at one point after 3 rounds, I was 7th. I was 7th on the leaderboard. The top 16 make the official semifinals to go on to determine the championship. And game 4 just smoked me. I made mistakes. So I'm going to take full responsibility. First 3 games I played as flawlessly as I could play. That's why I did so well. And then that 4th game, I made some mistakes, and it was a lot of fun. So if you are a person that's into Catan, hey, email me. You can always reply back here and email me. And, I can tell you next year I'll definitely be entering some more of these. Very inexpensive to do a qualifier, but a lot of fun, and you're with some very intelligent people. But what does this have to do with investing? And what I was thinking about it is when you play at this level, everybody knows the rules. Everybody knows the standard strategy and probability. So what differentiates moving from being, let's say, a standard investor to being a great investor, or a what's the difference? Like, and same with this game, like 147 people, they all know the same rules. There's not like, oh my gosh, I never thought of that before. How good you are in negotiations, how good you are in table talk. So that is the difference, in my opinion, after playing at this level. Like, what differentiates number 1 from number 147? It's they convince people to go with them or supplement their strategy. And that's something that we need to look at in companies. So that's why the top CEOs rise to the levels they do. And that's also why they can move from industry to industry. They learn things, but they can also negotiate. They can also figure out and motivate people, because the finances behind the scenes are really the same. I mean, it's the same. Maybe a MicroStrategy does something that's very different that no one's thought of before. But for the most part, if you're running a fast food company or a bank, or they have the same kinds of things they can do, but what can you supplement? So that's kind of where I took it from there. Corey, what questions? You ever played? You said you'd never played this game, right?
No, but it reminds me, I grew up playing this game called HeroClix, which is a kind of a long form board game style thing. And I was like the only kid there. And, where I grew up a couple miles from the Dell headquarters here in Round Rock. And so I'd go to these tournaments. My mom would take me 2 tournaments a week, and I would play against all these Dell engineers. I was like the only kid who stuck around and just had a lot of fun. So
cool.
The camaraderie, at the end of the day, you're going to win some tournaments. In HeroClix, if you won tournaments, you'd get these limited edition figures, which I still have. And unfortunately, none of them are worth anything like a Pokemon card or whatever. But yeah, but at the end of the day, you're just left with those memories, right? And had a lot of fun.
Yeah. Well, cool. Well, let me get people into some some memories of a stock that they're glad they're not in. And every once in a while we get this question like, hey, what do we think about this biotech company or that biotech company? And biotech sounds like, wow, that's a good place to be. And this company, Viking Therapeutics, came out with some data today. And I personally had invested in them, I don't know, a year ago, 2 years ago, and got out of it. So guess what? I didn't sit through this 30% loss today. But obviously the thesis of let's come out with an obesity pill, that's a great idea. Well, unfortunately, when you do this, it takes years and years of testing. Wow, Corey, check it out. It is down 43% now. So they came out with their, an idea. And when I purchased them, my thesis is this company would get bought by somebody trying to go compete against Eli Lilly or Novo. But what we see here is no one bought them, and eventually they missed on their trials. And this is why buying these kind of companies, it's really so risky because we have no idea what happens at those trials until the news comes out. And when the news comes out, you're down 43%. Or guess what? If the news had come out positive, you could have been up 43%. But it's less like investing and more like gambling in a sense. So anyways, that's just a quick thesis on Viking Therapeutics and their bad news.
Mike, important to note that they what the results of the trials and things will be. So it's like, how could you have a leg up on that as an investor, right?
Yeah, and I have a good friend, or I have a couple friends that work for companies that support these biotech companies. They support them by doing the testing or executing the project management. Those companies are much safer than the actual therapeutic company. I mean, they're like doing the work to help these companies do this testing and move it through but it takes like 10 years to get anything approved. So, it's kind of like, if I was going to invest in this space, I'd be more in the supporting companies because, and they don't have the near the ups or downs. But, anyways. But a company that has lots of ups, well, I shouldn't say that. It's probably more stable at this point. But all of us use. Corey's going to talk about Home Depot.
Yep, and I've got a lot of concrete being poured right outside my window right now. So if you can't hear me or it's loud, I apologize about that. Yeah, this is a company that you would call a compounder. So Home Depot, just zoom out a little bit. They did announce earnings, and I mentioned earlier this week, I'm going to highlight what some of these companies are saying about the consumer. But just real kind of bigger picture on a Home Depot. Home Depot is considered a compounder because they're doing a few different things at the same time. One, they operate in that duopoly kind of structure between them and Lowe's, and they have very strong market position. For the record, they did say they believe in this quarter they are taking share. That's how they worded it. They think they're winning share at this point. So fair enough, that's what they think. But they're probably winning share from that duopoly alternative Lowe's. And then what do they do that makes them a compounder other than operating in the structure that they do? They're going to be paying you solid dividends every year. They're going to be growing those dividends. They're going to have pricing power in the market. They're going to maintain their margins through market cycles. And they're going to buy back shares when they can and to whatever degree they can. And so they're kind of a bellwether, and they compound value over time, similar to a market index. But what they had pretty strong results today, Mike. We can go, I'll zip down here. Well, okay, there we go. It didn't want to let me. Hold on. I don't know what happened. All right. Sorry about that. Okay. Mike, I'm having flashbacks to our glitches last week. Okay.
I can see it now. You're good.
All right. So, yeah, earnings at the end of the quarter were very similar to prior year. Revenues did jump up that and I think they had net growth of like 2.8%. So again, they're kind of business as usual. Housing market isn't great. We all know that. But what do they have to say about the consumer? They said customers engage more broadly in smaller home improvement projects. So they're seeing ongoing demand there. I listened to the conference call. They said their customer is very healthy right now. They said that their customer is still sitting on tons of new equity in their home, what they view as new equity, and that higher rates are limiting those larger projects for the time being. So, I mean, what else could you want? They've got some organic growth. They are set up well for a lower rate environment if and when that ever comes, but their customers are strong and healthy. So, Mike, people always wonder, are we in a bubble? Is something going to go wrong? When you listen to these companies, they don't have bad things to say about the consumer right now, and Home Depot certainly doesn't. So that's all I've got.
Yeah, and I'll just jump in. Home Depot's only, I don't know, a half a mile from my house. So, and Lowe's is, I don't know, 3 miles. I could actually walk to Home Depot. Not that I ever would, because I got to bring stuff home. But what I've noticed about Home Depot especially is I have never seen so many people, employees, willing to help. So, and this is a single view of one store, is like when I walk around if I walk around some stores, like I'm trying to find someone to ask a question to if I need to, but Home Depot always has plenty of people. And so when you were showing the revenue, I was kind of looking at their cost of sales that, they've not skimped. They could do this on a quarterly, a quarter or something. They could skimp on their employees or their cost of sales or their, administrative costs, and it would hurt customer service and hurt their eventually it would hurt their sales. But I just, from my own personal perspective, they do really good with that. So I do appreciate Home Depot. And whether the housing market is interest rates go down and we're building more houses, Home Depot does well. But even if we're in a place where like we're not building more houses, but people are doing more, improve their current house, Home Depot does well. So, I mean, it's really just such a great company, and the duopoly between them and Lowe's. I mean, I'm not saying anything bad about Lowe's. They're probably both great companies to be in. So,
Mike, what I've seen on fundamentally, I think Lowe's management over the prior few years has gotten a little too greedy with their buybacks, and they've taken on unnecessary debt just to buy back their own stock. And Home Depot has not fallen victim to that trap. So I think they've got a little more disciplined approach.
Okay. Awesome. Thanks, everybody. We'll be back tomorrow. Bye.